Welcome back on The Leaders Who Care. Today we have Luca Zerbini. Welcome, Luca, an impact-driven leader with a track record of sustainability, business strategy, and purpose-driven leadership. But more importantly, Luca is the CEO and co-founder of Una Terra, 200 million venture capital fund, partnering with the Prince of Monaco Trust and driving circular economy solution, combined climate change and biodiversity loss. Una Terra actually has earned a global recognition named as Innovative Fund for the Future by the World Economic Forum, top impact investor by Real Leaders, and one of the top 50 emerging managers by the Impact Assets. So in addition to his leadership at Una Terra, Luca serves as a sustainability operating advisor at Advent International, managing over 100 billion in assets. Before transitioning to an impact investing, Luca is a highly accomplished C-suite executive leading private equity-backed companies with over $1 billion sales in Bain Capital, Milestone Capital, as well as his diverse leadership background includes roles as managing consultant with Bain across Europe, US, as well as senior leadership roles with companies like HP, Amcor, and Honeywell. So, Luca, welcome back. Welcome back on The Leaders Who Care. You are certainly one of those leaders that we follow closely, and we really honor the work you do.
Thank you so much, Marian. Pleasure to be back again.
Today, we have a little bit of a twist here, as this isn't going to be another conversation about impact. So today I'm stepping into the role of a skeptical investor who is not convinced that purpose-driven leadership actually drives real business results. And Luca, you're in the hot seat to prove that impact-driven leadership isn't just idealism, it's smart business. So can you change my mind, or let's find out?
Let's do it. We'll see what I'm experiencing this on a daily basis, so I'm sure we're going to have a good conversation.
All right. Why does sustainability in venture capital matter in the grand scheme of things? Is this really a scalable opportunity, or is it just a niche focus for forward thinkers?
Well, Marian, we're really living in a period of dramatic change. So if you think about it, for the longest time, there was quite a very stable environment. Instead, in the upcoming years, we're going to change pretty much everything about the way we live. We're changing the energy from oil and gas to renewables. We're changing mobility from internal combustion engines to more electric mobility and chargers. We are changing the way we eat to a lot more, better for you options, let's say, in general, a lot more vegetarian diets. We're also improving the way we package foods. We are also changing the way we are building construction. And so all of that is actually requiring innovation, and a lot more innovation than in the past, which is the reason why venture capital is key. This is not only Una Terra saying it, it's actually the United Nations and a number of other large NGOs, as well as the largest investors. If you even hear the head of BlackRock, as much as it's not been as much supportive as in the past of ESG, he's still saying that the largest unicorns are going to be appearing in the next few years are all going to be impact driven. And the reason for that is very simple. Most of the areas that need to be changed require significant innovation, and the most efficient way and effective way to scale that innovation is through venture capital investment.
Yeah, but what happened with the ozone layer? We thought like this is a big thing, and now the ozone kind of really hole disappeared, and we kind of made a panic, right? That was not necessarily. So what are the scientific kind of proofs that this is really, the world is kind of changing negatively, or we should really pay a serious attention to sustainability? Because it's, I believe in it, it's useful, it's good, but at the same time, what are the proofs? How do we know that this is real?
Well, actually, the ozone layer is a very good example in the past of the ability to collaborate and find solutions. So at the time the ozone layer started to become thinner, science actually realized that one of the biggest causes was CFC type of gas, which are the one that you find in sprays. And as a result, there was a very quick ban that was imposed on all companies in the world to not use this type of gas. And very quickly, nature, as soon as you stop damaging nature, started rebuilding the ozone layer. Yes, it's a couple of years already that the ozone layer is back to what it was in the past. So here we are in a similar situation with many other issues that we have created in parallel. And you probably heard about the planetary boundaries. Some of them are really in a critical conditions, and they include the things like CO2 emissions, for instance, where over time, because of our use of CO2 as a part of carbon that we release in the atmosphere from energy, from mobility, from the way we eat, the land use, etc., we have created an enormous amount of CO2, a lot more than what is usually appearing in the atmosphere. And as a result, even if is a very tiny fraction more, it actually has created an increase in temperature. And in any case, a change in climate that we are seeing on a daily basis, from the fires in LA to the floods that we had in Germany not too long ago to the one in Pakistan and all across the world. The climate is becoming more extreme. It's not that on a daily basis there is a change. It's more like that over time is actually becoming a lot worse. And this is probably one of the biggest targets that Impact has and is absolutely supported by science. We can see very clearly that the increase in temperature is real, and even just 1 or 2 degrees are going to make a huge difference across the world in all sorts of places, from the Amazon to the places where we live on a daily basis.
But there's also in history, there has been extreme conditions. And I think even here in the UK, if I'm not mistaken, they found leftovers of mammoth, so technically UK must have been frozen, There has been extreme conditions around the world.
Yeah.
Is that not a normal cycle of the planet?
So it's very true that there have been extreme conditions. The difference has been that that type of change has happened over very, very long period of times. What has happened here with the changes that have been created by humans, as we call it, anthropo change, is that they happen on a very short amount of time. So in the same period that usually would take hundreds of years to make a change in time, has happened only in the last 50 years. And as a result, when you do changes so fast, our biosphere, our animals and nature, to be clear, are not able to adapt very quickly. You probably know very well about evolution, or the theory of evolution, that we tend to adapt to changes in our environment. And of course, if the environment changes too quickly, no animal is able to adapt. And you can actually see that very, very clearly in the data. From the 1970s to today, we have lost something like 70% of the species that exist in nature, both animal and plants. And this is mostly because of the impact created by the changes that are caused by humans. So humans have become by far the most successful species in the world. Unfortunately, we have also damaged all the other species that exist and coexist with us, but also that are the ones that give us our success. So we cannot continue like this.
Talking about how this translates into investment, let's be real. Are startups pitching sustainability because they care, or because it's easier way to secure funding?
Well, you touch a very good point. So we see both cases, but I would say experienced impact investor it's very easy to see the difference, right? So there are ones that try to use sustainability as almost painting green everything they do, and that of course is not going to make a real difference, and is not going to help them either. I think the one that really make a difference are first of all companies that can make solutions that are better for their customers, regardless of sustainability, and then have sustainability as an important byproduct. So very often we look at the ones that have a direct line of sight on impact that is significant, but that are also not trying to sell you that you have to buy at a higher price just because of sustainability, or that you have to accept to live in a different way just because of sustainability. That will never work. What we are expecting is that they have a better solution, a cheaper solution, something that is dramatically better for any customer. And on top of that, that brings along significant improvement in terms of climate, in terms of biodiversity, in terms of nature regeneration.
How do you vet startups claiming to be sustainable? So what's stopping them from slapping the eco-friendly on their pitch deck and without delivering that results, and especially if they have very good pitches? So
there are many ways by which you can do that. First of all, so we invest only in companies that already have revenues, and so they have customers. So we typically talk to their customers and understand the way that the company not only is improving their financial or their needs, but also how they impact from emission perspective, from waste perspective, from a water perspective, and everything else. Second, of course, there are many ways to certify their claims. There are very widespread solution for certification, which companies can use to demonstrate what they're doing. So, for instance, you can do life cycle assessment with external auditors, recycling certification if the product is related to recycling. You can do emission certifications, etc. Right? So there are many ways to demonstrate that what you're doing is really having an impact. Of course, we also have our own internal impact assessment. So we have a sustainability committee, which is comprised of people from Cambridge, from Institute for Sustainable Leadership, EIT Climate Kick. So some of the best organizations in the world that, again, have tons of experience in understanding and developing businesses that can have a real impact on the world. And then, of course, it's all about people. So in the end, we can spend time with people. Typically, we never invest in a company after a month. We know them. We spend over a year or even more with some of these companies so that we see really if their behavior is aligned with what they're saying. So it's not just, send me a pitch deck and I will decide if I invest. We actually spend time with them, and we don't spend time with them bothering them. We help them because we believe we can support their growth, but also while we are helping them, we're also understanding better the way they make decisions and the way they really impact the world for a better future.
does Una Terra invest in companies in polluting industries like oil and gas to drive change from the inside, or do you only bet on clean industries?
So our fund starts from the point of view that a lot of the industries that are damaging the world are hard to change. And that's actually one of the reasons why venture capital is very successful. Because a lot of the incumbents, you can see it from oil and gas companies, you can see it from plastic producer, are never truly going to change, right? They may show some improvement because they have to, but even recently, all the oil and gas companies even abandoned their claim to target net zero in a number of years, and they keep producing more damaging products as well as not really innovating. And it's the typical Kodak effect, right? Even Kodak had the solution to digital picture, but they never implemented because it was damaging their own business. So that's a little bit the same point of view. So first of all, the fund will never invest in what is called do not significantly harm areas. So we do not invest in tobacco, in oil and gas, or anything like that, because we don't believe it would be helpful. But second, because we don't believe these industries can be changed from the inside, particularly when you have such a dramatic change required. Now, of course, there are exceptions to the rule. One that I can give is Ørsted, a company in the Nordics that went from an oil and gas company to one of the leaders in wind, but it's very rare. And we have a lot of counterexamples of companies that will never change. And so we require to find solutions that are going to be substituting what is in the market now with more sustainable solution. That doesn't mean that we're going to change entirely the infrastructure that exists, because if we can use the existing infrastructure, we can be a lot more successful and faster in scaling up. But it does mean that we're not going to work with and partner with the companies that we believe are not in a position to really change.
Do we have to rely on government subsidies and regulations to be viable?
In general, we prefer to be investing in companies that do not require any type of subsidies or any type of fees on the other side to be successful. The reality is that there are cases in which at the beginning of an industry of some sort, there is a role for the government to help reducing what is called the green premium, right? So the additional cost of sustainability that you would have, not just with sustainability, but any new technology usually is more expensive. So they tend to start with a premium, and very often with people that can afford that type of technology, and then come in. Imagine all the type of technologies that you may have had, from having the latest phone to having the latest TV or whatever. Usually they're a lot more expensive, and then after a few years they become comparable to, right? So the idea for us is that normally we would not want to see a government intervention, and if there is a government intervention, should be limited in time, just because there are cases in which we cannot avoid that, and is required mostly to price externalities that today are not priced, like in the example of CO2 emission. No one is paying for the air being polluted by CO2 extreme emission. No one is paying for plastic going into the ocean. So if the government can put a price on that through different measures, that can be helpful, but it should not be the base of a business. The business has to be attractive in itself, and then on top of that, be more sustainable than what we had in the past.
And I've seen governments that do incentivize this, which is, as you say, could be helpful, but isn't it making this initiative based on fragile business model?
No, I think it's actually out at the beginning. So if you think about Europe, we have the Green Deal, which has been for a number of years the main direction of the European Commission and European Union to lead really from a sustainability perspective across many different problems, like, as I said, emissions and climate change, like, pollution and biodiversity loss, etc., etc. I think it has been useful because it has created, through regulation, a lot of visibility in the market. Consumers know what they need to do and how to understand the difference, or a little bit better than in the past in any case. Investors can find more stable and attractive businesses to invest in, and financial institutions are also more incentivized to invest and put their money in this type of direction. I think we have come to a point, even in Europe, that regulation is probably more than present, and we actually have just very recently the European Commission saying they need to simplify, they need to reduce some of the regulation, because when you over-regulate, then, to your point, the risk is that it doesn't help businesses. Actually, you create more paperwork than real change, and on the other side, it also can create strange effects where you would have people try to create businesses that have no value. Typical example could be, the carbon credits that are still very much a very difficult environment to play in, or even carbon capture, which is still to be demonstrated as a viable technology. But these are also a little bit byproducts of periods of very high change. Whenever you have a high change, you always kind of find a little bit this type of effects. So we need to be even more skillful in identifying the good investment from the bad one.
No, look, I am a bit skeptical about the investment world because it's often criticized for fostering a toxic high pressure culture that prioritizes profits and rapid scaling at any cost. So how do you guard against that kind of internal motives or behaviors that can undermine the company's true values?
Well, I think that's a very, very important question, because it goes at the core of what we're trying to achieve. So here is not just a sustainability transition, it's really a systemic change transition, and capitalism itself will have to change from being, just focus on money and to please a shareholder, to actually cater to all other stakeholders, including the environment, but including also employees, including customers, suppliers, etc. So we very often hear and talk about a new type of capitalism that is a lot more comprehensive. And the reason for that is that if you think about the way a venture capital or a private equity fund would invest, first of all, they have a much longer investment period than what you have on Wall Street or the public market, which is expecting quarterly results. Right? So we have, let me say, the luxury of taking time to build very resilient and very sustainable businesses, which is not the case when you are required to demonstrate improvement and result on a consistent basis. And so you cannot really invest for the long term. For us, it's really about building new company, new technologies innovation, new business models that can make a real difference. And as a result, because it's about the long-term well-being of people and planet, it has to be also about not only the environment but also about the social side. So we care a lot about diversity and inclusion in the investment we made. We actually have made more than 50% of our investment in women who are founders and CEOs, which is actually a lot more than the 3% average that you have today in venture capital. And across the board, you expect to see a very, how can I say, systemic transition, and not just one of the businesses is going to do this or that. We're actually working to make sure there is a collaboration that allows different businesses and different financial institutions, different organizations to work together. And at a point, there will be that, expectation is that we will have a tipping point that will allow the world to be in a better position across the board and not just on individual SDGs or individual areas.
But wouldn't be that criticized, like if you're just that you're turning more like the new capitalism a bit more closer to socialism. So that's another kind of point of view. And then why do you promote women as CEOs? And what about if women don't want to be CEOs?
No, actually, so first of all, on the women's side, it's not that we want to promote women or men. We want to promote the best, and it just so happens that for the longest time we forgot about half of the population. There are plenty of studies that demonstrate that more participation of women, as well as other diversity, can increase dramatically profits. So by doing good, you're also doing well for the company. So it's not about one gender or the other, and it's not about one race or one geography. It's just that more participation, of course, very basically, statistically, you're going to find a lot more, smarter, better people, and as a result, better results. But coming back to your point, I think, look.
Look, I have a point to make here, and that's just imagine a scenario like a
Yeah.
lot more women are in C-suite positions, but we all know that the demand for a CEO role from a woman may mean a lot of sacrifices from her family. So if that is at the expense of not having children or having, let's say, less amount of children,
Yeah.
talking about sustainability in the world, it's yeah, if women refuse to do the thing that's really that gives the sustainability of humankind and don't give birth, then we're doomed, right? So this is where I'm just kind of questioning here, of how where's the balance of that, and really what are your
Yeah,
views?
I think the balance is in being free to choose, right? So the point is, we would not impose to anyone to become a CEO, and definitely not to not have a family. What I'm trying to say is that when someone has decided to create a business and they believe that business is going to make a difference, and to be honest with you, we see more and more people who have already a lot of experience, so they will definitely be after having a family and having kids. They actually want to be supported as much as men are. So I think that's where we can help them if they are interested in doing that. But coming to your point of socialism, I think there is no socialism in what we do. Our target IRR is at least 25%, so is by far above average returns. And the reason for that is because, once again, you can actually create a lot more value if you consider not only the typical manufacturer financial goods, but also you consider an engaged workforce, you consider a good and healthy environment, and you consider everything else as one interaction, one system. So I give you an example. There have been a number of studies on B corporation or benefit corporation, as they're called, which are companies that are certifying on a yearly basis that they're actually considering not only financial return but also sustainability, etc. And consistently, when you compare benefit corporation to non-benefit corporation, the benefit corporation actually have substantially better returns, better profits, and as a result, you would expect to have better outcomes of your investment. So this is actually something that some funds are starting to look at in impact, is actually to invest in companies that are certified benefit corporation is one example of how you can create more value by doing also good for the environment.
Let me ask you an example. What happens if one of your portfolio companies has to choose between profitability and sustainability? Do you expect them to sacrifice profit to save the planet?
Well, typically we don't invest in companies that have a trade-off between sustainability and finance. As I said, it might happen, but it's not the type of company we would invest in, because we truly believe that when you create more value for customers because of your offering, and that offering is also more sustainable, you actually have a positive circle that is created. So in the companies we invest in, I've never seen that type of situation. I'm sure there are others in which that may happen, but then it's always going to be a non-competitive proposition compared to a company that can do both at the same time, right? So if you think about what type of company we want to invest, we just don't want to invest in a company that is a little bit better, and then there's going to be something else that's going to, destroy that company in the competitive market. We want to find solutions, and we're patient investor in the sense as well, not only because we're patient in the company we invest in, but also because we're patient in looking for the best possible solution that we can identify in an industry that is not only better financially, but also better from a sustainability perspective.
If sustainability is so profitable, why aren't more venture capitalists jumping in? What are you seeing that they are missing, or are they just smarter about the risks?
Well, there are different answers, I think, to the question. So first of all, we see a lot of entrepreneurs going in this direction. So it's definitely not for lack of we say ideas or companies. I think what is lacking is actually funds in venture capital that invest in this space. There are a number, but still not enough compared to the challenge that we're facing. The estimate is that there is about 1.2 trillion invested in impact globally, while we would need probably at least four to execute on the challenges we have ahead, and some say even up to 8 trillion per year to be able to get to the targets that we have had. So definitely underinvestment. I think the underinvestment is a combination of two main factors. One is a very complex environment. As I said, we're trying to change everything from energy, mobility, food, beverage, industrial goods, real estate. And for each of them, you require people that can really rethink and review each of those industries at scale. So it's not a very easy spot to be in. And on top of that, they have to understand for the first time, not only the financials, but also what are the implications from a sustainability perspective. So on the environment, on a different type of environment, on the the air, on the ocean, on the land, etc. So there are so many complex, interacting items that is very hard to be a very good investor in this space. On top of that, I would say for the first time, we are also fighting against the situation with the asset owners. So the asset owners for the longest time have been required to minimize risk for their own investor. Think about the typical pension fund or insurance company. Well, they have to guarantee that there is a return for the people they're investing for. And those people are, nurses and teachers and whoever else has put some money in those funds. So they definitely don't want to see that money wasted in the wrong places. Let me say the regulatory and compliance requirements of this type of funds puts them in a position where they cannot invest in new funds. And unfortunately, those new funds are exactly the funds we should invest in now, because they are the impact funds. Most of the impact funds are new. There is no it's a 30-year-old, sustainability fund. They are very, very rare exception to this. And as a result, it's very hard for the large pool of money to invest in this space. So some of the work that is being done right now is to modify the allocation of pension fund, insurance fund, etc., in a way that will allow them to dedicate, not of course the entire fund, but even 5% or 10% of those funds to impact investing, because it is one of the most important, if not the most critical issue that we have to address in our lifetime, and also because it's the issue that both the United Nations and the European Union believe are at the top of the agenda. That's why we have the Sustainable Development Goals at the United Nations level, we have the Green Deal at the European Union level, and all of those are considered the number one priority for us. If you look also at the risk that being reported every year by the World Economic Forum, asking the top CEOs around the world what they see as the most important risk, consistently in the last 10 years, at the top three have been climate change, biodiversity loss, nature issues. And so as a result, I think we're all, or at least by and large, in alignment that this is something that needs to be addressed. It's just that our system are created not for change, but for the opposite of change, right? Which is maintaining the status quo. So we're actually fighting against not only climate change, but also the requirement to change some of the system we have relied upon for our, for our life and our wealth for a very long time.
Talking about regulations and what we are fighting against, how much regulation is enough? Because typically when you put regulations there for a good reason, but you also mentioned earlier that this can backfire, and you're seeing that we're difficult to change the status quo because there is regulations that prevent our mindset. So how much regulation is enough when it comes down to sustainability?
I mean, look, is very, I would say, depending on the situation, we have over-regulated or under-regulated, and there's been a lot of, I think, adjustment that has been required related to the to this big moment of change, right? So I think the European Union went down the path of creating a lot of regulation, and at some point that regulation has become too much, particularly with what is called CSRD now. And they recognize that, given the feedback that they got from businesses. And so even just a couple of weeks ago, they actually agreed to simplify, and they promised by the end of this month that they will come up with a significant reduction of the regulation. They said at least 25% less. So they will reduce not only the requirements, but also the number of regulations that have been applied, because there is really an incredible amount from, let me say, regulating the different issues like emissions or like, waste, recycling, etc., but also like the way you communicate, the greenwashing, etc., etc. I think on the other hand, there has been a very pragmatic approach in the US to do something called the IRA, right? So the Inflation Reduction Act, that was just putting a lot of money in the hands of people that could use them for impact. And that actually was almost the opposite approach. Maybe not enough regulation, just throwing money at the problem and seeing what sticks. I think by seeing the result on both sides, we probably want to go in between the two. Not too much regulation that will stop people from even trying to do the right thing, or even to try to communicate what they're doing because they're scared of saying something that would be considered potentially an issue. But on the other hand, no regulation at all creates very big disparities. In the US, we've seen that they're doing something very good on energy, but they're not doing anything on recycling, for instance, and that can be very damaging as well.
About the European Union, are we heading towards a world of overkill, of endless paperwork, and that's
Yeah,
stifles?
I think to some extent we may think that. I think like if you see it over time, honestly, it's been a very big improvement. We're probably ahead of everybody else, in terms of being leading on sustainability. And even if you ask our American colleagues or Asian colleagues, I see more and more of them coming to Europe to learn, not only the way we have done regulation, but also the way we invest. What are the technologies that can make a difference? So Europe in the impact space is becoming really the impact leader, and regulation has had a big part of that. So we shouldn't always be only negative about regulation. Like, single-use plastic has been an example for the world, or EPR, extended producer responsibility, or emission regulation for cars has been copied pretty much by every country around the world. Having said that, I think we've come to a point where if the regulation becomes just a way to check the box, like in some cases, CSRD could be an example of that, then the risk is that regulation becomes not a source of innovation, but a source of more paperwork, as you said. And I think that's where we are right now. I think there has been a very clear stop by the European Commission, particularly after the second term of this, European Commission coalition under Ursula von der Leyen. And I think they realized that they were going too far. And so we are very much looking forward to the end of this month to see what type of simplification in the regulation related to the Green Deal we're going to see. and hopefully we're going to have a lot more balance.
You mentioned earlier carbon credits.
Yeah.
Let's talk about them. Are they an effective way to combat climate change or just a license for polluters to keep polluting?
Well, I think that's a good example of something that, in theory could work very well, but in practice has not really worked at all. So first of all, there has been a first instance of credits that were done in the past, and they were provided. There was a market for carbon credits that was created at the end of the 1990s. And because of the way the credits were set up, it actually didn't help at all. In the end, a lot of credits ended up in the end of the wrong companies, the wrong countries, and as a result, it was very ineffective. Similarly, right now there is no a real market; it's not a formalized market, and so you can argue a lot of the carbon credits have very different efficacy. There is not a real auditing, a certification of this carbon credits today, and as a result, you have very different pricing. You can see anything from $40 a ton to 400. So 10x difference between the what are considered the most effective or the most ineffective carbon credits, and that's of course not very reassuring for any investor. But because there is not a really formalized market, and on top of that, I would say those carbon credits should be used only when you don't have any other alternative to stop your own emissions or solve your own sustainability issues. So in the mind of the regulators, but even on the industry in general, there has always been the point that you should do all the things that you need to do, like you improve, alternative energy in your company, then improve waste, improve water, improve anything else that is related to the environment. Similarly, from a social and governance perspective, but if you don't, maybe you have still a gap compared to your targets, because there are some technologies that still do not exist for some solutions. Say, for example, how do you fly a plane today without emissions? Of course, there is still not a really complete solution. So as a result, you could actually argue it makes sense for the remaining, say, 5-10% of your emissions to use carbon credits. So at least you subsidize someone else that can actually help you in achieving your objective. The problem is when people think that they can not do anything, and instead of that do carbon credits as if they were the solution to everything else. And that's of course not going to work, because first of all, there is not enough alternative to the big chunk of business that we have created, but also because we are still not very confident that the carbon credit market out there is a substantial and efficient market.
I have a question regarding US. I mean, if major players like US aren't fully committed to this, we're seeing in terms of sustainability and
Yeah.
current, obviously, policy makers, why should Europe bother leading this charge alone?
I think is one of these cases in which it's been for a long time. Europe has not been a leader since the two wars that we have in the last century. Of course, there has been Europe has been scared to lead because of the bad experiences of the past, let's say. And so the United States have been leading the global agenda, both from a military perspective and even governance perspective, etc. I think in the case of sustainability, I hear more and more, even our American friends and colleagues telling us, you need to lead this one because the US is not ready to do it. And obviously the last president and their policy are very clearly in that direction. But the reality is that if we don't do it, who else is going to do it? I think
China, what about China? Maybe they might steal the show and just do it.
Yeah, there are some things where they are leading. They're doing a lot in terms of alternative energy, in terms of electric mobility. But China is still a country in very high growth, and India similarly. So it's to some extent is unfair to expect countries that are still growing and still bringing a number of people to have a decent life and different opportunities. To also carry the load of saying, oh, not only you have to do this, but you also have to be more sustainable, better solutions. So I think we are the one who have created, now I mean China as well, but in the past we have created a lot more CO2 emissions in Europe and in the US than the rest of the world. And I think it's also our responsibility to take this forward and show the world how you can balance business growth with sustainability agenda. And I think China will be very quickly following. Whenever they see something that works, they're usually very good at replicating and even improving. So we see a lot of interest in what is being done in Europe by Chinese investor, by Indian investor, by Japanese investor that also want to replicate this and don't want to be left behind when the impact solutions and agenda will be becoming mainstream.
Look, I appreciate the insights you've shared because there's been a lot of debates about this, and I'm curious if anyone now is listening to our discussion, what is one thing that every business leader or investor listening today must do to make sustainability more than just a buzzword at their work?
Well, the most important thing at the beginning is actually to learn more and to understand the education, understand the different topics in depth, and not stay on the surface, because only when you understand you can actually analyze and then solve those issues. I think it's very, very important that sustainability is a leadership topic. It starts at the top. So only if the CEO and the executive team and the board believe in it and live by it, then you can expect the rest of the organization to also jump on board and make it happen. It's very disappointing, of course, if you give you the example of Starbucks, right? The new CEO that lives in California but goes and works in the headquarters of Starbucks, so he even has a private jet in his contracts to do that. And then on the other side, he talks about sustainability. So, of course, he's not living the purpose that you are talking about. I think what we are expecting more and more is transparency and belief in the purpose, while I can also say on the other side that being in a number of companies where that transition has happened, and you can see the level of engagement of people in is incredibly high, because when you see that you're building not only something that is valuable for your customer, but you're also providing very well for the environment, for the rest of the world, then people have a completely different level of passion for what they do and energy when they go to work. And as a result, those companies are going to be a lot more successful compared to the ones instead that are going to leave sustainability as a nice to have or painting green what they're doing with some consultancy or some work on the side.
Thank you, Luca. I really appreciate your time today, your insights. Really sincerely wish you all the best, and may God bless you and your organization to spread that. Maybe a final question for me. What's your dream? What do you dream of, for a better world? So what's the kind of, what would be lovely to see in your lifetime?
Well, I think the dream is definitely to bring more of the same passion that I feel on a daily basis, together with my colleagues, to the rest of the world. So that's why we, have a very wide ecosystem of collaborations that we try to move forward together. And I think it's very important that we never believe we have all the solutions, but there is always only through collaboration that we can achieve these very important changes. So my dream and my passion is to share more and more what we're doing. Here in this space, there is no competition. It's really as much as we can get others to do what we're doing. I think we will be very happy because it's important for the world, it's important for the people, and for the rest of the environment.
And if anybody wants to get in touch with you, whether this is an investor, whether this is an executive that may be interested into learning more or be interested into Una Terra, what's the best way to get in touch?
Always, either on LinkedIn, or you can write to me at luca@unaterra.vc. I would be very happy to either answer directly or put in touch with the right person in our organization. I don't think we ever not respond to messages or not answering one way or the other, at least to say, a better answer could come from this person, because it's very important that we also change attitude in terms of the way we work with venture capital.
Thank you, Luca. All the best.